They want you looking at the chart, terrified by the red candles, while they quietly secure the physical supply that runs the future economy. Welcome back to the Financial War Chronicles. There is a massive deception unfolding in the silver market right now. It is a sleight of hand so sophisticated that even veteran traders are missing it. While the institutional algorithms were busy hammering the spot price down to $61 and change, creating the illusion of a crash, a tectonic shift occurred in South Korea that renders that paper price completely obsolete. This isn't just news. It is a fundamental alteration of the physics behind the global energy transition. Samsung SDI has just validated a production technology that the mainstream financial media is completely misinterpreting. They see a battery breakthrough. We see a supply chain black hole that is about to swallow the world's remaining silver reserves. The reporters are dazzled by the specs, 9-minute charge times, 900-mile range, but they are ignoring the chemical reality that makes it possible. This is the detail that the mining conglomerates are scrambling to address. This is the variable that makes a billion-ounce deficit look manageable. The secret to Samsung's solid-state revolution is not some exotic new polymer. It is silver. And we aren't talking about trace elements anymore. We are talking about a structural integration of massive quantities of silver into the automotive ecosystem. In this deep dive, we are going to tear apart the silver bomb that just detonated in the R&D labs. We will examine the chemistry of the carbon-silver composite, run the extinction level math that the energy agencies are hiding, and explain why Friday's dip was not a sell-off. It was a final boarding call. The financial establishment is playing a game of derivatives. The engineers are playing a game of elements. Elements don't bluff. This is the dawn of the anode era. To grasp why this announcement spells the end of cheap silver, we must briefly descend into the molecular level. The world has spent 3 decades dependent on the lithium-ion liquid electrolyte battery. It powers everything from your smartphone to the electric crossover in your garage. While effective, this architecture suffers from a catastrophic vulnerability, the dendrite. When you force energy into a standard lithium cell too quickly, the ions cluster into sharp, needle-like structures. These dendrites grow like jagged roots, eventually piercing the separator wall. The result is a short circuit and a thermal event, a fire. This physical limitation is why charging takes an hour. It is why range suffers in the cold. It is why safety remains a concern. The industry has chased the solid-state dream for years. A battery with no liquid, zero fire risk, and immense density. Every major auto giant promised it, but they all hit the same wall. They could not suppress the dendrites without destroying performance. Graphite failed. Silicon swelled. Pure lithium was volatile. Then Samsung cracked the code. Their researchers realized that a specific noble metal, when utilized as a nanocomposite layer, acted as the perfect regulator. It permitted lithium ions to migrate efficiently, but halted dendrite growth completely. That metal is silver, specifically a silver carbon matrix. Now, this is not speculative, it is peer-reviewed engineering. In Samsung's design, a precise layer of silver powder mixed with carbon manages the lithium deposition. The silver essentially dissolves the lithium, creating a smooth, safe distribution. This breakthrough allows for batteries that are lighter, denser, and practically combustion-proof. But here's the catch that changes our financial reality. To achieve this, the battery requires silver, not in micrograms, but in grams, significant heavy grams. For the first time, silver is transitioning from a passive conductor to an active electrochemical component. It is becoming the skeleton of the energy storage system. Now, you might ask, cars already use silver, what's the big deal? Let's frame the context. A combustion engine vehicle today consumes roughly 15 to 20 grams of silver, mostly in electronics, contacts, and defrosters. A standard EV pushes that to maybe 40 or 50 grams for inverters and management systems. That increase alone has already pushed the market into a structural deficit. But the solid-state architecture rewrites the equation entirely. We are no longer talking about plating a few switches. We are talking about coating the entire anode surface area of a massive battery pack. Initial data from Samsung ONS technical papers indicates a loading factor anywhere from 5 to 10 grams of silver per kilogram of anode material. More aggressive projections for high-performance luxury vehicles suggest we could see upwards of half a kilogram that whisks 500 grams per car. But let's play the skeptic. Let's assume a highly efficient, conservative design adds just 50 grams of active silver per vehicle. That brings the total per EV to around 100 grams. Global auto production sits at roughly 90 million units annually. If merely 10% of that fleet transitions to solid-state tech, that is 9 million vehicles, 9 million times 100 grams equals 900 million grams. That is roughly 29 million ounces of brand new net positive demand. That sounds absorbable, doesn't it? But that is the everything goes right low-end estimate. What if adoption hits 50%? What if the loading is actually 200 grams per massive truck battery? If the major manufacturers hit their mass production targets by late 2027, Automotive silver demand could triple, leaping from 90 million ounces to nearly 300 million ounces a year. Where do we find 200 million extra ounces? Do we drain the COMEX? The registered vaults are already bleeding out, sitting near 30 million ounces. Do we ask the miners? Global production has stagnated at 830 million ounces. This single innovation has the potential to devour a third of all mining supply strictly for car batteries. That leaves nothing for photovoltaics, nothing for iPhones, nothing for jewelry, and certainly nothing for your stack. And remember, Samsung is not speculating. They are building the factory. This timeline has crunched forward. We aren't looking at 2035, we are looking at right now. While the paper price was being smashed on Friday, procurement teams in Seoul were likely finalizing long-term offtake agreements. They understand the math. They know that without secured silver, their billion-dollar gigafactories are just empty warehouses. This marks a paradigm shift in demand character. Historically, silver was an industrial condiment, a pinch here, a dust there. Because the quantity per unit was tiny, the price was irrelevant to the final product cost. If silver exploded to $100, an iPhone cost rose by 50 cents. Apple didn't blink. But in the solid-state era, silver becomes a primary line item. If a battery pack needs 500 grams at $60 an ounce, that is a $1,000 cost component. If silver hits $100, that cost balloons to $1,600. This terrifies the automakers. In a low-margin industry, a $600 swing is fatal. Their strategy? They will attempt to thrift it. They will try to engineer the silver out. They will dilute the mixture. But chemistry is a harsh mistress. You cannot cheat the electron flow, reduce the silver, and the dendrites return. If the dendrites return, the fire risk returns. Will you buy a car that has a 5% chance of incinerating your garage to save a few $100? No. Samsung knows this. The OEMs know this. They are hostages to the periodic table. This creates inelastic demand. We saw it with solar. Now we see it with EVs. Two colossal sectors, energy and transport, are pivoting simultaneously towards silver-intensive technologies. And they are crashing into a supply chain that has been starved of capital for a decade. In this light, Friday's drop to 61.50 is comical. We are staring at a future where silver is as critical as crude oil. If the world ran low on oil and the price dropped to $2, would you panic sell, or would you buy every barrel you could store? Why is the mainstream financial news silent? Why does Bloomberg focus on lithium gluts while ignoring the silver squeeze? Because the narrative lags behind the laboratory. Wall Street analysts are lazy. They are working off vintage spreadsheets that treat silver as a legacy metal for cutlery and mirrors. They haven't read the Samsung white papers. They haven't analyzed the QuantumScape patents. If they did, they would see the chemical symbol AG everywhere. This information gap is your opportunity. Right now, on this Saturday, the market is mispricing the metal because it models demand as linear. It expects 2% growth. It is blind to the step function change that solid-state tech represents. Recall palladium in the early 2000s. The auto industry switched catalytic converter chemistry, and nobody noticed until the stockpiles vanished. Palladium went from $200 to $3,000. We are watching the prequel to that exact movie. The bomb has gone off in the supply chain. The shockwave just hasn't hit the price chart yet. When the first mass-market silver carbon EV launches, when the specs go public and the world realizes there are 20 ounces of silver in a single-family sedan, the panic buying won't be from retail investors. It will be from Ford, GM, and BMW. And they won't be bidding at $61.50. Thanks for watching. Don't forget to like and subscribe for more deep dives.